You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPKX volatility products. SPKX options and futures are traded on the SPKX Volatility Index, SPKY, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPKX at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again to break down all the madness, the mayhem, the maelstrom that is the world of volatility. Yes, it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling Options Insider, easy for me to say, the ever-compelling Options Insider Radio Network, upon which so many of you have been mainlining these days. Remember, if you like what you hear on the on-demand side, keep rating and reviewing. It clearly is helping so many new folks discover not just the world of options, but the world of volatility and everything else we do here on the network, crypto advisors, the option block, options boot camp, you name it. Whole bunch of goodness going on here on the network. So you like what you hear on the on-demand side, keep rating and reviewing. Of course, if you want to go above and beyond, get exclusive content, including options oddities coming up directly after this show today, as well as our pro Q&As. We had a great one with Steve Sosnick, the chief options strategist at IB this week, where you guys can get all of your questions off of your chest on any product category and topic that you desire. And of course, we have our big June Pro Trading Crate giveaway. We delayed it because I was a little bit under the weather. I'm feeling a lot better today. Thanks for all your well wishes that all you folks sent in. As you could tell, my voice has mostly returned to normal. I can mostly complete a full sentence without breaking into a fit of coughing. So that is a good thing. I have fought back from the precipice of COVID, and I have lived to tell the tale. And of course, if you want to join us on all that good pro stuff and a whole bunch more, theoptionsinsider.com/pro is the place to go. And of course, you can go above and beyond as well and go to that /secret club. But that's a secret. Don't tell anybody about that one. That's just between me and you. And of course, everyone else who's joining me on the show today. Let's start out there in the Southern Volatility Mecca, known as Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, how go things in the Southern Volatility Mecca, sir?
Things are great. Good to be here. Happy to be here and excited to talk all things volatility.
Well, then you're on the right show. If you were coming on crypto, I would say you're on the wrong one. But this is the right show to talk about all things volatility. And joining us to help hold down the volatility conversation this week, holding down the MIAX hot seat, our old friend, Mr. Matt McFarland, the derivatives, products, and biz dev specialist for futures over there at MIAX. Matt, welcome back to the program. To you as well, sir.
Hi, Mark. Yeah, thanks for having me back. It's good to be back. Glad to hear that you're on the mend, and looking forward to talking about volatility this afternoon.
Yeah, it was a little rough having to talk about anything, really, when you can't hold a complete sentence without breaking into a spasm of coughing. So it's nice to have most of that in the rearview mirror this week. But before we dive into the volatility review, Mr. Matt, I know you come armed with some interesting updates, because we've been talking for a while here on the show and waiting, really, with bated breath. You know, what's going to happen? What's going to happen? What's the latest with everything going on in the world of convexity? Well, a little birdie has told me, Mr. Matt, that you may know about a few developments on that front. What you got to share with us this week, sir?
Yeah, there has been some developments on the convexity shares front. Before I share those developments, I do have to have a brief disclaimer and disclosure. That disclaimer and disclosure being that, note that the views I expressed today are my own as an officer of Miami International Holdings and do not represent or reflect the views of anyone else, including convexity shares. Also, please know that Miami International Holdings owns MIAX Futures, which is the majority owner of convexity shares. So convexity shares intends to launch 2 spikes-based ETFs on August 16th.
All right, we're looking forward to that. We've been kind of hearing rumors about this for a while. Let's dig into a little bit. What exactly are these ETFs going to be? What can we look forward to here, Matt?
Yeah, there's going to be 2 spikes-based ETFs. One will be called the Convexity Shares 1x Spikes Futures ETF that will trade under the ticker symbol SPKX. And the other one will be the Convexity Shares Daily 1.5x Spikes Futures ETF, trading under the ticker symbol SPKY. Both of them will be primarily listed on NYSE Arca, and both will be benchmarked to a T3 index. The T3 index is the T3 Spike Front 2 Futures Index, which is ticker SPKF. So the SPKF, the benchmark for both of the ETFs, measure the return from a rolling long position in the front 2 spikes futures contracts, and those positions are rolled continuously throughout the course of the month. And the 1x fund seeks to match the returns of the benchmark, and the 1.5x fund seeks to produce returns that correspond to 150% of the benchmark index. Of course, those are before consideration for fees and expenses. But in general, I'd say that the introduction of ETFs on Spikes August 16th completes the Spikes ecosystem. Currently, we have Spikes futures available for trading. We have Spikes options available for trading. And come August 16th, there'll be Spikes ETFs available for trading.
August 16th, the day we have been waiting for, the third leg of the stool, as you mentioned. You already have the options, we have the futures. What was missing from that was the ETFs, and now August 16th. So pretty much a month from today, listeners, we will have those ETFs in our hot little trading accounts. Any insights you could share with us, Matt, in terms of why they decided to go with those specific structures, those specific degrees of leverage, Matt?
Yeah, I think, when you look at the exchange traded volatility landscape, you have ETFs that provide, or ETPs really, that provide you long exposure and short exposure with various degrees of leverage. Given, historical happenings in the in the volatility ETP space, convexity shares really was not comfortable providing anything with short exposure, nor were they comfortable providing anything with exceptionally long exposure. And that's why it's taking kind of a conservative approach with the 1x long and 1.5 times long. Plus, if you look in the exchange traded vol ETP space, the 1 times long and the 1.5 times long have garnered a decent amount of AUM and have been popular with traders and investors. So consequently think that these ETPs, these spikes ETPs will be popular with investors as well.
I have no idea why a short VIX ETP would be cause of concern for anyone, Matt. That seems like I don't know why anyone would be worried about that. But this is great news. We've been waiting for this. A lot of our listeners have been asking us about this week after week. When are we going to finally see more in the ecosystem spikes ETPs? When are we going to see these ETPs we've been talking about forever finally make it to market? Well, you have a date now, listeners. August 16th, pretty much exactly a month from now, you'll be able to trade these, all other things going according to plan. So there you go. You can stop sending the email. If you want, you can keep sending them to Matt. I'm sure he'll be happy to field those as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, let us commence it. Let us begin the journey to the dark side of volatility. Yes, it is time for the Volatility Review, the portion of the show where we break down everything going on this week all the way through into today in the world of vol trading and trending and analysis and unusual activity, all sorts of fun perspectives. And as we kick off the show here, we're seeing the markets mostly in a joyous mood. Pretty much every index, kind of the polar opposite of where we were this time yesterday. Most of the major indices were down nearly 2%. Today, we're threatening 2% to the upside. Actually, Dow leading the charge this week, up nearly 2%, about 1.9%. The S&P up about 1 2/3%, and the NASDAQ up about 1.4%. That means most of our vol friends are taking a bit of a break from this time last week. Spikes, when we kicked off the show, is at about a 23 3/4. Puts it down about 2 points from where it was this time last week. VIX cash is at about 24 double or so. It puts it down about 3/4 of a point from where it was this time last week. VVIX, so the vol of vol, 88 3/4. That's up about 4 3/4, almost 5 points from where it was this time last week. Speaking of vol, our old friend, the Viking, a.k.a. V-Spikes, is at about a 106. That's up 8 points from where it was this time last show. Last show, of course, it was a new low, of course, of 98 out there. So we were at new lows for vol of vol, at least from the Viking measure this time last week. All right, a lot to unpack. Let's go around the horn. Let's start in the Southern Volatility Mecca. First off, Mr. Meatball, what are your thoughts on we're finally going to have these much-anticipated convexity shares ETFs finally launching in about a month? If you have any thoughts on those, have at it. Then B, what else is lighting up your tape down there in the Southern Volatility Mecca, sir?
Yeah, we are seeing vol kind of fall apart, and we are watching that. I'm very excited for this Spikes ETP. I can't wait to start trading it, and it'll have that fourth it eventually, hopefully, will get not just a stool, but a full-on chair when they add options to that ATP as well. So that's the other piece I'm excited about and looking forward to. This is a pretty neat thing. Congratulations to Matt and his team. I know they've been working hard on it. But as a whole, vol is getting kind of smoked today. Yesterday they were pricing vol like it could never drop below 25, and then it did it literally the very next day. So very interesting indeed what we are seeing in the vol surface and the vol landscape today.
Yeah, yesterday at this time we were down almost 2% across the board. Were you surprised at the degree of the turnaround we saw yesterday, Mr. Beeple?
It did catch me off guard. But I guess it was telling because we've got quite the pop today.
They were just keeping their powder dry for today. Same question for you, Mr. Matt. Obviously, We led with the fireworks right out of the gate there with the new ETFs coming to market in about a month. But aside from that big news, sir, what else is catching your eye and lighting up your tape in the world of volatility this week, sir?
Yeah, I agree with Mark, observing the same thing, vol falling apart. And from a broader perspective, when I look at the SPIKES index over the course of 2022, what I've observed is a series of lower highs. Back in January, we printed above 40. In March, we printed just above 37. In May, we had a high of around just under 37. In June, on June 13th, that was a day where the market sold off almost 4%. We printed just above 35. So we've got this series of lower highs, and I don't really call myself a technical analyst, but I think what a technical analyst would say about a series of lower highs is that consolidation is forming. And what consolidation in the volatility markets is really telling us is that the market is kind of shrugging off the themes that have been driving volatility in the earlier portion of the year, those themes specifically being inflation and the Fed raising interest rates. So earlier this week, we had CPI, and it was a pretty inflationary number. I think it was up 9.1%, which spurred on speculation that the Fed was going to raise interest rates by 100 basis points rather than 75 basis points at their meeting later this month. So that was really weighing on the market earlier this week. The market was down over 3%. So it's been really weak market up until today. But despite some pretty bearish signals out there earlier this week, there was really not much of a move higher in the SPIKES index. So the vol market seems to be kind of shrugging these things off. And it seems that something outside of the inflation or the Fed story, the things that have been driving vol earlier this year, is going to have to be the catalyst to spark vol higher. And I think you're not only seeing that in a series of lower highs and spikes, but you're seeing it in vol as well. V spikes, back on that June 13th day.
It's called the Viking on this show, Matt, just as an FYI.
Okay, the Viking was up at 140 back on June 13th, the day that the market sold off almost 4%. And today, it's around 100. So vol very low. Vol seems to be just shrugging off these inflationary concerns as well as rate hike concerns as well.
Let's see what kind of concerns are driving paper across the volatility products. Let's start in the land of the vol futures. Mr. Matt, I know when you're not talking to us on a show like this, you're out there driving more volume out there in the SPIKES futures. Catch us up. What's the latest? How are things going in the land of SPIKES futures these days, sir?
SPIKES futures are going very well. June volume, average daily volume was just north of 3,000 contracts per day. That compares to May, which was just under 2,000 contracts per day. So about a 50% increase from May to June. July has been kind of quiet. I think, the holiday is a factor there. But we're, the introduction of the ETFs is important for the SPIKES futures market. As you probably know, the SPIKES ETFs will hold SPIKES futures. The amount of SPIKES futures that they hold is a function of assets under management. So to the degree and extent to which the convexity shares garner AUM could be a potential boost to volumes and open interest in the SPIKES futures market.
It certainly has been a big driver for futures in the past, the ETPs. We'll see when these new ones launch what the upside is for these. Speaking of upside, let's see if we have any upside on the VIX futures surface this week. And coming into the start of the show, we saw a little bit lighter in that front portion of the old vol surface. The July future was down not quite a full point, about 0.8 of a point and we had the AUG future down right around 2/3 of a point. So that front portion of that curve remaining kind of weak, kind of tepid out there, which I suppose is what we can expect. We're still seeing that nice little bit of juice right around the AUG-NOV timeframe. That's kind of been the case for a while. That remains the case. No surprise there, folks are still pricing in a little bit of juice around that midterm election timeframe. Mr. Meatball, anything catching your eye out there in the volatility surface this week, sir?
Yeah, we've fallen into a really nice contango now, where, my light is basically about to switch to red tonight. And that's because, VIX is now trading, VIX and spikes, both trading well below the future, and the curve itself looks very contango-y. It's kind of telling, that surface is saying, we could be headed for a period of maybe some lower volatility, and we may be in a spot where we want to think about shorting vol.
Heresy, sir. Shorting vol.
I know.
Town. Let's see what's going on out here in the realm of the vol options. Let's kick things off in the land of spikes and getting a little bit of action out here this week. If I could just throw that in there. There we go. All right. That's better. Yeah, spikes options. We're still having pretty much our old friends, the July pars, still leading the dance out there. AUG 30 is joining them right now, which is kind of nice to see. A little bit more relevant strike lighting it up out there in spikes options. Everyone's still waiting. A month from now, listeners, that's the date. August 16th, we will have the new convexity shares ETFs launched, and that'll be interesting to see the impact they have on the spikes options going forward. Speaking of vol options, let's get on out to VIX land. VIX options actually putting up some numbers today. It's kind of one of those, usually a day like today, listeners, strong upside day is usually not the recipe for a ton of VIX options paper, but I guess VIX didn't get the memo today because already we have 427,000 contracts on the tape today. So we're closing in on the ADV already. The ADV is 479,000 contracts. That's down about 5,000 from this time last week. So it hasn't really been a rock'em sock'em robots week, but today seems to be on course to change that. Let's dive on out with the top VIX positions. What are the big size open positions in VIX right now, listeners? We shall find out. By the way, it is 90-10 calls over puts in the top 10 right now, which is kind of old school VIX paper. Haven't seen that in a while. Super call heavy VIX. That's kind of interesting. Number 10, in fact, is our first and only put in the top 10 size VIX positions this week, listeners. It is the July 20 put, 150,000 of those. Everything else is a call, listeners, including number 9, 150,000 as well of the July 35s. Remember that. Not going to see too many other strikes. That's, shall we say, reasonable. Number 8, $1.53 of the SEP 75s. Here we go again, back to the 75s. Number 7, 158,000 of the AUG doubles, a.k.a. the 155s. Number 6, $1.59 of the NOV 80s. So NOV 75, not quite optimistic enough for you. Listeners, I present to you for your consideration the NOV 80s, 159,000 of those for number 6. Number 5, 168,000 of the July 60s. Then here we go with an actually relevant strike again. Number 4, 198,000 of the July 30s. Number 3, 200,000 pretty much exactly of the March 75s. We were talking about this last week, listeners. A little bit of that roll action from AUG out to March. That is reflected in our top positions because number 2 is now the AUG 75s. That was number 1 for a long time, listeners. Now it is number 2 with 218,000 contracts. And rounding out the top 10 this week, listeners, number 1, 219,000 of the NOV 70 calls. So once again, listeners, we have the optimistic upside, the other legs of these 1x5s, call them what you will, lighting up the tape out there this week. Let's get to some of the action from today. Then we'll see what paper caught the eye of my fellow vol viewers today. Let's start with today. Today's most active contract is the July 25 put. 37,500 of those have traded today, followed by number 2, 29,000 of the AUG 60s. Number 3, 20,000 exactly of the AUG 21 puts. Number 4, 19,500 of the AUG 60 calls. And then rounding out the top 5 today, 16,000 of the July 28 calls. Yesterday was the most active day of the week, but again, today is not done, and it's on pace for some decent volume, so we shall see. Yesterday, 796,000 contracts on the tape. The big dog yesterday, you know what? This looks like this was actually, they threw in the top open interest positions. Let's go to Wednesday. Let's see if they got the right data for Wednesday. Here we go. Wednesday, 569,000 contracts on the tape. Number one, we have the July 30, 64,000 of those. That seems more realistic. Number two, 25,000 of the OCK 32 halves. Number three, 21,000 of the August 75 calls. Number four, 20,000 of the AUG 22 puts. And rounding out the top five on Wednesday, 20,000 of the AUG 50s, 5-0s. An interesting strike. Tuesday, 464,000 contracts on the tape. The big dog on Tuesday, 23,000 of the July 30s, followed by 22,000 of the July 23 puts. Number three, 178,000 of the NOV 40s. 17,000 of the NOV 40s. Number four, 17,000 as well, the NOV 60s. Looks like a bit of a NOV 40-60 vertical. And rounding out the top five on Tuesday, as my voice starts to fade, about 17,000 of the AUG 28 calls. And then on Monday, we were open again on Monday, so we actually had some paper on Monday again after all these holiday weeks have been flying fast and furious. Kind of a light day, though, 368,000 on the tape on Monday. Number one, 50,000 of the October 75 calls, followed by number two, 50,000 as well, of the March 75, so still doing a little bit of that roll on Monday. Number three, we have the July 24 puts, 16,000 of those. Number four, 14,000 of the July 25 puts. And rounding out the top five on Monday, the July 30 calls. Mr. Meatball, sir, interesting paper unfolding this week. Anything catching your eye in the land of VIX options this week, sir?
Yeah, we saw our trader definitely roll more of that October position into March. That was worth noting. And then there was a really big call spread that went up yesterday. The November 50-70 call spread went up 95,000 times. That was a biggie, and it went up substantially. That was a big one.
Find our most active trades here for Thursday. There we go, listener. So it was a very active day, obviously, when we're putting up 796,000 contracts. The most active contract yesterday, as you talked about, Mr. Meatball, number one was 95,000 of the NOV 50s, followed by 95,000 as well of the NOV 70s, so a bit of a vertical there. Also, we had about 50,000 for number three of the August 40 calls. Number four, about 38,000 of the AUG 35s. And rounding out the top five on a pretty active Thursday, listeners, we had 34,000 of the July 30 calls. So an intriguing day, even though ADV coming off mostly this week. We'll see if we can hold up. Given today's paper, we might actually see the ADV start to turn up as we're putting up more numbers out here. Let's see if our old friend, we were joking earlier on the show about what could possibly go wrong with an inverse vol product, listeners. Well, let's see what's going on with our old friend SVIX. Let's see if he can deliver. And so far today, actually putting up some numbers out here in SVIX land. We've been lamenting for a while that this thing can't really seem to catch fire. It's, by the way, SVIX trading 1135 right now, up about 0.15. SVIX, obviously the inverse VIX ETF out there. The ADV, though, picking up a little bit today. It's up to about 882, up about 90 contracts over the week. And so far today, seems like it's on pace to actually put up some numbers. 695 contracts on the tape so far in SVIX. Doesn't sound like a lot, but when your ADV is only 882, it's actually a fair amount. In terms of the most active today, the big dog today, the July 11 calls expiring today, 213 of those, followed by the AUG 11s going up 71 times, and the SEP 11 puts 65 times. So someone's got quite the axe to grind on the 11 strike out here in SVIX. In terms of what are the size positions out here right now, well, surprise, surprise, the big dog in SVIX is 1,800 of the July 11 calls. So someone's obviously trying to take some of those off with today's paper. Yeah, they traded only 200 so far, so they got a bit of a ways to go. They want to close out all 1,800 by the end of the day. Followed by number two, about 600 of the July 12 calls. Again, these are all expiring today. Number 3, 400 of the AUG 9 puts. Number 4, about 400 as well of the July 10 puts. And rounding out the top 5 in terms of size positions in SVIX right now, the Jan 8 puts, about 400 of those as well. Mr. Meatball, anything catching your eye or lighting up your tape in the world of SVIX this week, sir?
Well, again, volume still on the options is still a little weak, but it should start garnering some volume if vol's going to stay low like this. I would be less than shocked to see this one start to get a lot of volume in the stock itself as traders start to play with short vol. This is going to be one that they like.
Well, people certainly seem to be liking its compatriot there, its counterpart, UVIX today, because just make sure these numbers, UVIX is putting up some numbers today, listeners. The ADV has already ticked up about 1,200 contracts this week. It's up to nearly 4,700 contracts a day, so already running circles around SVIX, and it looks like 20,000 contracts have traded today in UVIX. So this thing is on fire. Let's go out here and see. By the way, UVIX, when we kicked off the show, was at about 1410, down about 2/3 of a point. It's actually a little bit lower now. It's down about a 1390, so down another 0.2 of a point from where we kicked off the show. Looks like the big dogs today, the July 14 puts, those are expiring today, obviously, about 2,800 of those, followed by the AUG 11 puts, 2,700 of those. Number 3, 2,500 of the July 16 puts. Number 4, 2,500 as well of the AUG 13 puts. And rounding out the top 5 most active, we have the July 15 calls, 1,500 of those. So you're talking over 10,000 contracts just in that top 5 right there. So, wow, it's like UVIX suddenly woke up today and wanted to do some paper. We had never seen to my knowledge, a 20,000 plus contract day in UVIX. Wow. This is quite a fair amount of paper. In terms of the size positions, what are the big dogs out here in UVIX right now? Number 1, 4,000 of the July 16 puts. Number 2, 3,300 of the July 14 puts. Number 3, 2,400 of the July 27 calls. Number 4, 2,300 as well of the July 19 calls. And rounding out the top 5 size positions in UVIX right now, we have the July 17 calls, 2,000 of those. Obviously, all that going the way of the dodo today, so we're going to see a dramatically reshaped top positions in UVIX next week, probably why a lot of this paper is going up. Looks like we may be getting some rolls out to August with this kind of stuff. Mr. Mark, are you as surprised as I am that UVIX putting up 20,000 contracts today? Is there a big day?
Yeah, there's some big paper today. Markets have tightened up substantially. Everything I'm looking at in August is about a nickel wide or a dime wide. So they're starting to tighten up these markets because the stock volume is there. It's going to do 5-6 million shares today, and it is moving. So you've got traders jumping in. Makes sense to me.
Does it make sense to you, listeners? Are you part of the legion that is apparently trading up UVIX today? Seems like people were waiting until today. Today is the day, apparently, when everyone and their mother and their brother decided, you know what, I'm going to trade myself a little bit of UVIX. So have you guys made the plunge? Hit us up. Let us know. I'm curious what you guys are up to out here and all these various VIX ETPs. Let's get on out to VXX, a product that can't seem to really get out of its own way these days. 2130 when we kicked off the show, up about 0.6. It actually has ticked up a little more. It's up about 0.8 now. It's about 21.5. So trending in an interesting direction today. Seeing about 71,000 contracts on the tape today, which is right around the ADV, which is 67,000, which is pretty much unchanged from this time last week. And unlike UVIX, I don't really expect to see massive surges of paper in VXX until we get a little bit more clarity on exactly what the hell Barclays is planning to do with this thing. We've talked about it before. We won't belabor it again on the show this week. Instead, let's break down what remains of the size positions in VXX, listeners. It is still 100% put loaded. Can't find a call anywhere in the top 10 again this week. And the number 1 big dog, the AUG 16 puts. We were joking about these last week, kind of liking these. They're still there, about 110,000 of those for number 1, followed by number 2, the July 20 puts, 43,000 of those. Number 3, 42,000 of the July 19 puts, and rounding out the top 5 this week, 40,000 of the July 18 puts. In terms of most active paper today, we've got 2,500 of the July 10 calls going up. So actually, looks like it's all calls trading today. That's interesting. Followed by number 2, 2,400 of the July 42s. Followed by 2,300 of the July 21 halves. So maybe we got a funky vertical there. Number 4, 2,000 of the July 28s. And rounding out the top 5 today, we've got the July 22s, 2,000 of those bad boys. So a lot of call paper lighting it up today in VXX. Mr. Meatball, we were joking last week about those AUG 16 puts in VXX. Did you ever end up picking up any of those bad boys? Anything else catching your eye in the land of VXX this week, sir?
I did not pick up those VXX puts. I don't think. One second. No, I did not. But I did notice that, VXX is down kind of the way it should be today. Let me look at VIXY real fast. Trying to end my screen. It's actually down a little bit less than it should be. Yet again, underperforming by a touch, but it's down, and we're waiting to see what that will bring us.
We don't have to wait anymore to see what UVXY is going to bring us. UVXY, when we kicked off the show, listeners, 1260, down about 0.4 of a point, and it's about 1250 right now, so it's down about half a point total for this portion of the show. The ADV and UVXY still hanging out right around about a quarter of a million contracts, down about 3,000. It's 253 this week, listeners. And today we're seeing 257,000 contracts on the tape, so pretty much right in line. In terms of the size positions right now in UVXY, we have the July 13 puts, so number 1, 16,500 of those, followed by number 2, 16,300 of the July 14 calls. Number 3, about 15,000 of the July 14 puts. Number 4, 13,300 of the July 15 calls. And rounding out the top 5 in UVXY, the July expiring next week, 13 puts, 12,500 of those bad boys. So obviously going to have a big reshuffling of our top positions here in UVXY this time next week. In terms of action, what is lighting it up out there today? The big dog today, the July 13 calls, 25,400 of those have gone up, followed by number 2, about 17,000 of the July 13 puts. Number 3, 13,300 of the July 12 half puts. Number 4, about 12,000 of the July 12 half calls. And rounding out the top 5 most active contracts out here in UVXY today, listeners, we have 11,400 of the July 13 halves. Mr. Meatball, I know you've been talking for a while, but maybe some of these new entrants are going to start stealing some of your love for UVXY. Well, what was catching your eye in UVXY this week, sir?
Yeah, and they are. That's part of the reason why you're probably seeing UVIX trade so actively. Trading volume in UVXY is relatively speaking, not as robust as UVIX. Right now, UVXY is on pace to hit its average daily volume, whereas UVIX, by the time we're done today, it could hit 7, 8, 9 million, which would be 3 times its normal volume. So I do think they're stealing some stuff. A lot of activity in UVXY on stuff expiring today. I did buy some 12.5 puts for 4 cents a little while on the open, and those are paying off nicely. We'll see whether they come back and bid vol up at the end of the day. I suspect they'll at least come nibbling at it toward the end of the day today.
Is it a good day for nibbles, listeners? We shall find out as we head on into the single name realm of volatility, because it's back, listeners. It is back. We are in it yet again. We were kind of hanging out in the dregs, the tail end of earnings season for a little while, but now it is back. It is official. We have real names that you've actually heard of popping off again this week. No more Helen of Troy, as fun as that one is. And we had some big names this week. PepsiCo on Tuesday, Delta Airlines on Wednesday, JP Morgan Chase, Morgan Stanley. Once you start getting into the financials, you know it's on, listeners. Those were yesterday. Today, Wells Fargo, PNC, Citi, Progressive Corp, U.S. Bancorp, and BlackRock all popping off today. So we got a whole smorgasbord of financials going off. And that's kind of what spooked the market yesterday. Weakness coming out of Morgan and some of their numbers. One of the many things we had, the inflation numbers spooked everybody as well. Jamie Dimon seems not reticent at all about throwing around the R word, and that spooked everybody. So big numbers, big names reporting this week. We have the latest here coming off of our friends from Orats here. After the numbers yesterday, we have JP Morgan yesterday before the bell. They were at about 112 going into their announcement. They were pricing in 3.5%. They delivered 4.3% to the dark side. So interesting stuff. Morgan Stanley also yesterday before the bell, trading right around $75. They were pricing in 4.2%, and they delivered 1.6%. They didn't really move at all. Let's see where they're hanging out today, listeners. See if we can get a little bit of a sense. 77.72. So they have rallied well north of where they are now. They're up. They're up about almost $3, $2.70 from where they were going into their announcement. So yeah, these reports, listeners, are all geared around frame of reference. We measure the earnings impact right going into and coming out of the announcement, but obviously if you hold it for longer, your frame of reference will change. That's certainly interesting to see. We also had Citi before the bell today. They were pricing in, they're at $45.50, I should say. They were pricing in $1.09 they're pricing in $1.59. In the past, they've moved $1.09. Let's see where Citi is hanging out right now, listeners. $48.69. So they rallied over $3, $3.19. So they pretty much doubled their straddle. Wow, that's a big move. Bank of America, they're coming up next week. They're the 18th before the bell. They're trading at almost $31 as of this report. They're pricing in $1.40. In the past, they've moved 85 cents. So it seems like the order of the day is more vol, listeners, compared to previous cycles. And given what we've seen so far, kind of hard to argue with that. Ally, our buddies out there in Ally, so Brian and company, they're on the 19th before the bell. 33.64 is where they were trading as of this report. They're pricing in about $2. In the past, they've moved to $1.38. So more juice out there in Ally land. Let's get away from financials. Let's go to J&J. They're on the 19th before the bell. They were trading 175 and about a half. They're pricing in 385. In the past, they've moved 370. So not a heck of a lot of difference for J&J out there. Let's go out to a name one or two of you may have heard of and may have actually traded. This is Tesla. They're the 20th after the bell next week. They were trading $7.11 as of this report. They were pricing in $52.85. In the past, they've moved $45.92. So a little bit of extra juice, not a ton. And granted, it's hard to argue against more juice when you're talking about a name like Tesla. Let's go to a couple more. Let's go to United Airlines on the 20th after the bell as well. $38 is where they were trading as of this report. They were pricing in $2.63. In the past, they've moved to $1.75. So pretty much 90 cents more juice in United Airlines. Given what we've seen in the airline sector over the course of the past year, can anyone blame them for pricing in a little bit extra juice? I know I don't. My own experience with the old vid this week shows it is far from done. So that's going to be, of course, weighing on all things airline. Of course, input costs still a big factor for them as well. American Airlines, let's go out to American as well. They're the 21st before the bell. They were trading $14.31 as of this report. They're pricing in $1.15, listeners. In the past, they've moved 64 cents. So they are nearly doubling their straddle right now. American Airlines is still pretty much exactly there. It's $14.38 right now. So hasn't really moved at all since we ran these reports yesterday. So intriguing stuff here, listeners. By the way, the season is official. We ran our first official earnings season report yesterday. We had a whopping 3 names in it. And those 3 names delivered about 150%. So remember, 100% is if everything moved in line with its straddle. 150% means everything's moving a lot more than their straddle right now. It's not going to stay that way, listeners. Don't worry. But only 3 names reporting, we could get a little bit excited. Why not? Our last season, for example, we came in at about 83%. So if past is prologue, that number should come cratering in probably around week 3 or so. But we shall see. More names are coming once we have all the names reporting fast and furious. Then we will have a better sense of how this season is shaping up. Right now, also monitoring some earnings trades for you folks. We got 52 long straddles, 22 short straddles, and 42 long calendars for your trading education and information. Where can you find all this stuff? The earnings trades report, the earnings season report, the earnings move report, which shows all the predicted earnings moves and then compares them to historical, as well as the earnings move results reports, what actually happened. All 4 reports, all completely free, because we love you folks. TheOptionsInsider.com. Click on that Options News and Articles tab to begin your journey as we begin our next journey right on into the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Volatility voicemail, the portion of the show where you guys ask us questions. We also turn the spotlight back on you with our polls and our questions of the week. Last week, we asked you folks, as the vid catches up with me a little bit there, we asked you folks, the numbers were in from OCC. The June total volume was down 7.4% from last year, but ADV still up about 4.5%. With half the year in the books, the question remains, will 2022 total options volume beat last year's record of nearly 10 billion contracts? Gave you 3 choices: heck yes, heck no, or what the heck's ADV? And our audience looking kind of decidedly pessimistic. 50% saying heck no, 40% saying heck yes, and only 10% thankfully saying what the heck is ADV? Let's go out to this week's question. We're asking you this week. It's time to spread your options trading wings. In particular, which spread with wings is finding its way into your trading arsenal right now? Is it the Iron Condor, the Iron Fly, a regular butterfly, or other? Mr. Matt, let us start with you, sir. First off, you're our exchange representative here on the show. Are you surprised that our audience was as pessimistic with overall volume numbers for the rest of the year as they were last week? 50% saying we are not going to beat last year's record number of around 10 billion options contracts. If you have any thoughts on that, have at it. And then B, what do you think our audience is choosing this week in terms of their favorite spread with wings, sir?
Yeah, I was a little bit surprised by that. Probably reflective of the, summer markets that we're experiencing at the moment. It's kind of things are a bit quiet these days, and that may be reflective in the answer. I actually think that once we get out of the summer, we get into SEPAC, NOV, things will start heating up, volume will start picking up, and we have potential to have a better year in the options industry this year than we did last year. In terms of this week's question of the week, it actually reminds me of a product that from a previous employer of mine came out with a product called range options, which was it was essentially a packaged Iron Condor, and it was concept was essentially introduction to volatility trading for new options traders. Conceptually, I thought it was a pretty interesting idea. It never really got traction because if you think about it from a broker's perspective, you're taking something that had 4 options legs and putting it and has 1 option. So not a great product from a brokerage commission perspective, but a interesting product from a intro to vol trading type of perspective. So I'm going to say Iron Condor for this week's polls.
Interesting. Iron Condor love. Mr. Meatball, do you agree with the Iron Condor? Are you going to choose something else? And also, are you surprised that our audience was as pessimistic as they were about volume for this year, sir?
I'm not surprised at all. I think they're right. But in terms of what do I think of this, I'm still on board with the butterfly. I'm a pro butterfly guy. I'm a fly guy.
You are a fly guy. At least that's what you tell yourself all the time, Mr. Meatball. Let's see. Oh, you know what? It's getting neck and neck now with a couple hours left. It started off, the Iron Condor was kind of running away with it, and that surprised me because the Iron Condor, it seemed like it had its day in the sun, and now it seems like flies are kind of top of everyone's mind. Iron Condor was running away with it. Now we're getting neck and neck in the final hours here, listeners. Iron Condor, 41.9%. Hot on its heels, breathing down the back of its neck. We have the Butterfly, 38.7%, listeners. Number 3, the Ironfly, 12.9%, and then 6.5% for other. If you want Fly to take it, maybe you're a diehard Iron Condor person, get in there now. You got a couple of hours left. You folks listening on the podcast, you might have time, probably not. It probably will expire before the podcast gets up there on the network, listeners. So, another good reason, if you haven't done so, get on over there to @options right now and make your voice heard, listeners.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball, the portion of the show where we get difficult, we get dangerous. We attempt to figure out what the vol gods hold in store for the coming week. Coming into the end of the show, we have spikes a little bit shy of 24, about 23.93 right now. We have VIX a little bit north of 24, about a 24.40 or so. And let's see. Oh, I was actually looking fairly decent this time last week. I was at a 25 double, so a 25.55. But Mr. Meatball had a 23 handle. He was a 23.32, and Spike's 23.93. So you're 0.6 away, Mr. Meatball. So looks like you are going to be the closest this week. No winner chicken dinner for you because you're not within our super stringent 1/10 of a point margin of victory, but 0.6 of a point. You're at least somewhat mildly relevant. Mr. Jim Carroll was on the show last week. He was at a 20.5. He was feeling a lot more vol to the downside, and we did not reach that level, Mr. Jim. We thought that was a bit of a bridge too far on the show last week, but hey, he wanted to go big or go home, and I guess he went home this week. In terms of the rest of our listeners, you guys were all over the place. I'm just looking here. I don't see any 23 handles, so I don't, nothing. These are the ones they surfaced to me here, listeners, some of the closest ones. Our producers will go through, make sure that nobody, if you hit a bullseye, listeners, you will win your winner chicken dinner, your fabulous prizes. I don't see, I see some 24.60, looks like that is about, well, actually, 24.60, let's see. That actually looks pretty good for VIX, which is about a 24 double or so, 24.50. So we might have a winner with Munster. Producers, reach out to Mr. or Mrs. Munster and get their contact info because we may have a winner chicken dinner. Well done there, Munster. Finally, nice to have some listeners winning again. You've kind of been all over the place of late. All right, so that opens up the door for this week. No winner chicken dinner this week. So, Mr. Matt, I will allow you the pride of place, sir. What are you feeling for volatility this time next week, sir?
Well, as I noted earlier in the show, observing lower highs in the spikes index, consolidation in the market. Next week, I think the focus is going to be on the following week, I believe, that's when the Fed meeting is. So I think it's next week. It's kind of sit on your thumbs, twiddle your thumbs, so to speak. Not much going on in the market. So I think lower. Put me down for 21.75 in spikes.
21.75 in spikes. I'm sure the Meatball, he got the closest. I'm sure he'll want to go last. So I will go next to be the charitable fellow that I am. And we do have some earnings next week, including Tesla. That has the potential always to move some markets out there where Tesla tends to go. The masses tend to follow out there. So that could drive us some paper and some vol this time next week. But we're still kind of in the early parts of earnings season. Don't have a lot of the big names popping off, I think, till the following week. So I kind of like where I was this week, but maybe adjust it a little bit down. So I'm going to say 24 double, 24.55 for me. So Mr. Meatball, there's your market so far. 21.75 for Matt, 24 double for me. What palindromic number will you throw out at us this week, sir?
Oh, I'm going to say 23.32.
I wrote it before you even said it. That's how well I know. I started typing 23.32 before you even opened your mouth. Listeners can be our judge. Our producers can see. I did type that before you even said it. So there we go. 23.32 for the Meatball, kind of split in the upright. 21.75 to the dark side for Matt. 24 double for myself, which is, of course, the accurate, the prescient. People are saying, I did not scum anyone in our chat. I would never dare to scum one of our listeners. Nichols, 24 double. I was at 24 double first, Nichols. And, all right, lots of scum. Who's scumbagging? No one's scumbagging. Our chat gets very ornery when it comes to the skullduggery. Unfortunately, listeners, that's going to do it for this episode of Volatility Views. I want to thank all of you out there for joining us this week. If you are on the on-demand side, this will conclude your broadcast week. If you're one of our pro listeners, stay tuned. We'll be coming back with your exclusive Options Oddities program a little bit after this show, so stay tuned for that. Should be a fun one. But before we go, let's go around the horn. Mr. Matt, if folks want to learn more about these upcoming ETFs, where should they go? What should they do?
All things spikes, people should go to MIAXoptions.com/spikes. MIAXoptions.com/spikes.
There you go. MIAXoptions.com/spikes is the place to go. Mr. Meatball, folks want to kick the tires on all things Option Pit. Where should they go? What should they do?
Yeah, go to optionpit.com, and you definitely want to join in and read my blog. I'm writing a blog on VIX, volatility, spikes, you name it, every single day. Yesterday I was talking about that November call spread that went up and giving some actionable ideas. If your goal is to trade volatility and you want to make some money, go to optionpit.com and check us out.
Check them out, optionpit.com. Like I said, that's going to do it for our on-demand content out there. For all you pro folks, stay tuned. Options Oddities coming up in a little bit. All of you folks, thanks for joining us. Stay safe out there, and we'll see you back here next week, another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at MIAXoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.